Welcome back to my channel, fellow investors. In this video, I'm going to cover Ally Financial. Ally Financial is best known for their automotive financing arm that provides a lot of consumer financing. When people need to buy a car, they look to Ally Financial to finance that purchase. They also have an online bank that's quite popular. They do mortgage lending, and they're beginning to sell automotive insurance. It's good they're branching out, but their primary business is automotive financing, and they do that very well. The stock is doing really well. It's up 48% in 1 year, and it's up more than 10% year to date. Ally also pays a dividend of 3%. So overall, this stock has been really working for my portfolio. I own Ally and bought it in 2023 when a lot of financial services companies are being sold off. I want to take a look at my investment in Ally. I want to look at the company fundamentals. They just announced their earnings and see where I think the stock price ought to be for this company. See if they're selling shares at a discount or at a premium. The earnings were released on Thursday afternoon, and the market really liked what they heard. The stock price has rallied 7.7% since earnings were released. I believe that investors really like the future projections of earnings per share for the company. In short, their earnings per share are going to more than double over the next 24 months. So that's what caused the rally in the stock. I'll take a look at earnings per share and value the company based on earnings per share. Also look at free cash flows and book value and see if the book value is growing, which is important for a company of this type that resembles a bank. So let's take a look at the fundamentals of Ally and go through and make a decision whether I should buy more shares, hold my shares, or sell my shares in Ally Financial. Over the past year, Ally stock has been doing really well. It's up 48%, and it also pays a 3% dividend. So it's a 50% gain overall in 12 months. Really good investment. If you look at year to date, it's doing well in 2024. It's up 10.44%. Looking at this past week, it's up 3.55%. Meanwhile, the S&P is down considerably in the past week. It's down about 3.7%. So it's good to have a stock like this that really is doing well when it seems like most other stocks are really selling off and those stock prices are going down. The market cap for Ally is 11.87 billion. So I put them in the category of a small to mid-sized cap company. Their revenue is 8.2 billion. So you're paying almost 1.5 of revenue for the company. Net income's really good at $910 million. That has a yield of 8 to 9% if you look at market cap to net income. Forward PE is 12.5, very reasonable, especially if they start to grow. I think the forward PE will expand. Multiple analysts cover this stock, and there's some analysts that really like the company. There's some analysts that have a sell rating. On average, it's a hold rating, and they price the stock collectively pretty much where the stock price is being traded. So it's priced fairly according to the average of what analysts are saying about the stock. Ally as a company had been growing year after year, which was really impressive, but they hit a wall in 2023. They didn't grow. They missed slightly from growing, but it'll be important for them to start a new growth trend. If they don't grow, I don't see the stock going up very much. So it'll be important for them to really, kick in some growth and see that top line revenue line begin to expand. For a bank or this type of company, it's important to see the company expand their book value. That's how you value a bank. And since Ally is a finance company that happens to also have a bank, I view it as a bank. So their book value has been expanding. If you look at 22 to 23, it's expanding. And it's good to see that. It's an important factor in me making a decision whether to buy this stock or hold off from buying any more shares. The earnings per share is looking great for Ally. And I think this is why investors really bought into the stock this week. Earnings per share this year in 24, it's expected to be $3.09 per share. In 25, it's going to go up to $5.46. That's a 76% increase. And then if you look at 26, it's going to go up to $6.65 per share, another 22% increase on top of that. So it's more than doubling its earnings per share in the next 24 months. That's really impressive. If they can do that, this stock's going to continue to work and the stock price should continue to rise. The dividend at 3% is attractive, and they can more than afford the dividend. It's a 40% payout ratio, and I just showed profitability. The company should have plenty of profit and free cash flows to pay out that 3% dividend and likely increase the dividend rate as well. I performed my own evaluation of Ally to see where I think the stock ought to be priced, what I think the value per share is for this company. and I got to a value per share of $46.89, which is higher than their current stock price at $39 per share. That's a 20% discount. It's a nice, attractive discount on a company like this that has seen its stock price continue to rise over the last 12 months, and it pays a nice dividend. I take into account earnings per share, book value, and overall earnings to get to this number. I use a valuation that I use for banks, since I put Ally into a category of a bank or financial services company. So should I buy more shares in Ally, hold, or just sell my shares in the company? I'm going to answer some questions, and I have to get a check mark on each question. I have to buy into the each question that I'm going to ask before I can safely decide to buy. If I get any X's, I'm probably going to either hold or sell. So let's take a look at each question that I need to address. First, it's all about the company. Do I want to own this company? Do I think it's a good business to own? Do I like the industry? And the answer is yes. I like the focus of the company. I like that they do certain consumer financing services and financing in itself. So I like that about the company. The management team is really good. They really know their stuff, especially around automotive financing. The book value of the company has to be growing. If book value is falling, that means the value of this financial services company is falling. In this case here, they are growing their book value, so they get a check mark. Next, am I getting a discount? I don't buy stocks just to own them. I buy stocks so I can see them appreciate, and they reward me with appreciation, stock buybacks, and dividends. In the case of Ally, they offer a 20% discount, so that's really good. Overall, this is a buy for me. I'm going to be buying additional shares of Ally, especially on pullbacks. I'll be buying more shares and building up my position in Ally. In 2023, financial services companies are really sold off when we had that big banking scare, the Silicon Valley banking scare last year. And Ally, the stock went down, and it was a good time to pick up shares in this financial services company slash bank. And it really rewarded investors that bought in 2023. There's always an opportunity in every single market, whether we're seeing the stock market really rally or not. Financial services are working in 2024. I know that technology has been kind of like the superstar sector for the last, I guess, year and a half, and deservingly. Some stocks have just been doing great. But over the last month, technology has really been going down. Meanwhile, financials are doing quite well. So it's a good sector to be in. And Ally Financial gives me more exposure to the financial sector. It's good to have it in the portfolio, and it's good to buy some more shares in this bank. I really appreciate you watching, and I hope you found this video interesting.